Good evening, everybody. This is Huskins with the Forex Training Prof reporting on the review for the 11th of January 2011 and the preview for the 12th of January 2011. So let's see what happened today in today's market. In today's market, we had no particular trade, so we were just watching it, but we noticed that all three indexes which we follow, that's the DAX, the Dow, and the FTSE, all of them were up. So all three of the indexes were up, which would mean that the US dollar as well as the Japanese yen should be down because that's risk appetite. So let's see whether that was the case. In terms of Euro JPY and GBP JPY, both of these markets were down. The markets were up, so the yen component was down. That means it followed the risk appetite phenomena, and the US dollar was down against the Europeans too, at least against the Euro and the GBP. The US dollar was up against the CHF. Now this tells me that the euro and the pound were the risk appetite currencies for today, especially that the Australian dollar and the New Zealand dollar were weighed up by the floods which are happening in Australia, and bad trade balance which came out at 1.93 billion instead of 2.02 billion, which was expected by the market. So now coming to what to expect tomorrow, this is what I saw when I looked at my charts. Let's look at the Aussie US dollar first. The Australian US dollar has now made, it's continuously making a downtrend, lower lows and lower highs, lower low, lower high, lower low, lower high. This would be perhaps the 9th consecutive day wherein it might make a lower low and a lower high, and there isn't something which tells me that perhaps it's going to change direction. So I assume that this lower low, lower high phenomena will continue, and we could sell at the market with a stop above yesterday's high, or if we have a rally before the European Open, we could then sell into that rally if it hasn't broken yesterday's high with a stop at yesterday's high, and with a target at about 0.9747, because that's the swing low and it might prove of some support. So perhaps that's something which we need to look out for. Another reason why I'm looking at the Aussie US dollar is that the range for today was 135 pips, which is higher than both the weekly range as well as the monthly range. The average true range for the month is about 100 pips, and for the week is about 113 pips. So what it's actually telling me that the Australian dollar is kind of poised to break out, and if I had to choose a direction based on what I see, I'd look at the downside. So my entire trade idea is to sell the Aussie US dollar at some point tomorrow. I will leave the New Zealand dollar alone. Now the US dollar CAD is a different baby. Let's have a look at the US dollar CAD pair. We are currently breaking through the lows of this swing point out here. We've had a spike in oil prices together with the commodity currency Australian dollar not faring very well because of the flood situation in Australia. So commodity money, if people are bullish about commodities, they want to invest that in the Canadian dollar. And that coupled with a technical setup of breaking a all-time low, not an all-time but a multi-year low, tells me that USD CAD has more room to go down. So that's one of the other trades which I've mentioned. But I would sell this only if oil starts making new highs. So I'll look at the oil chart to trade the USD CAD from. And then Euro USD, I have previously already explained why I'm bearish on the euro, and today we had a good direction, upward direction on the DAX, and it was a one-way upward direction, and this caused the euro to perhaps gain some strength. But if DAX does not continue to move upwards, flattens or starts moving downwards, I'm of the opinion that the euro should plummet. So if the DAX starts selling, I'd follow the DAX downward on the Euro USD. So that's about it, guys. And one more thing, when it comes to news trading, we'd have a news trade at 7:30 tomorrow evening. That will be the Aussie numbers, which will be Aussie employment numbers. So I'll repost on how I'm going to perhaps trade the Australian numbers sometime tomorrow. Okay, then till the next video. Bye. Hi folks, this is Haskin Zio with the review of the non-farm payroll day and the Canadian employment day, that is January 7th, 2011. We basically were looking at two different trade events, and the entire day resulted in two trades and one no trade. Let's have a look at what happened during the day. At 2 o'clock, we have recommended a buy that was based on the USD JPY pair, that was based on a super strong ADP number which we had on Wednesday. So my expectation was that the market would anticipate a better than expected non-farm payroll number and would bid up the USD JPY. So as soon as the European markets open, that's at 2 o'clock, I bought the USD JPY, and just before the non-farm payroll, because we didn't know what the non-farm payroll would be. This is pre-news, buying in anticipation of what the market may expect the news to be, and we made about 11 pips. And post-news, what it turned out to be, a bad number. There were 100,000 jobs added, but then the market was expecting a lot more, about 150,000 more jobs. So we had this huge spike down. So we decided to sell the USD JPY pair, and we sold it at the end of the 1 minute the end of the 5 minute news candle for a total of about 38 pips. So that was it, folks, for Friday. We had two trades, both of them winners, and in all we made about 50 pips. Now let me look at or let me show you the Canadian employment. Canadian employment, we were looking to buy the USD JPY after we saw a downward move in the USD CAD pair, but the trade idea was cancelled at 8:30 because that's when the non-farm payroll came in. So after this time, I was concentrating on USD JPY. Though if we bought it here, it would have made some decent money, but you know, the forex industry is full of could have, should have, would have. Here, this is a trade which we did not take. So thank you, folks, for joining me.